Our chair now recognizes the gentleman from Texas, Mr. Green, ranking member of our Oversight Investigations Subcommittee.
Thank you, Mr. Chairman. I thank the ranking member as well, and Director Watt. It was a preeminent privilege to serve with you for nearly a decade in Congress. You were always a voice of reason, and I see that you continue to be that voice of reason. I'd like to talk to you about the FICO score that the GSEs are required to adhere to. Under this current FICO standard, we have a circumstance that allows bad credit for utilities and rental payments to be utilized when ascertaining a score, but the good credit that one has for these very same utilities and rental payments is not utilized. And I'm mentioning this to you because I think we need a more inclusive model. I'm not talking about doing anything that would in any way impair or prevent a good FICO score from being developed. I just think that it's fair. We've used this term fairness this morning, fair play. It seems fair to me that if you're going to use the adverse information, that we should use that information in a positive way when it is available for Fair Isaac to score. These FICO scores, as you know, are exceedingly important. In fact, they're everything when it comes to getting a loan. So can you please give me just a bit of intelligence on this in terms of how we might work with your office to try to expand and have a more inclusive credit scoring model?
Well, first of all, you are right. There is credit scoring is one of those areas where there's been
Director Watt, is your microphone on?
Did it go off? I'm sorry.
If you could pull it a little closer too, please.
Would you add these 30 seconds to my time, please?
I'll consider.
Thank you, Mr. Chairman.
Some things don't change in this committee. So there are alternative credit scoring models that are beginning to be out there now. FICO is updating its credit scoring model. Vantage has a credit scoring model. There's several. And what we've done in this year's 2015 scorecard is we've instructed Fannie and Freddie to evaluate these alternative credit scoring models to see if we can get to a better place in this area. Not a race to the bottom. We don't want credit scores that get more people the ability to get loans and are not reliable. So we ask them to evaluate the reliability of it. We ask them to evaluate the operational challenges that would go with implementing alternative credit scoring models. So this is an area that we're working aggressively on this year. We started last year in response, well, not in response, but a number of people on this committee have written to me about alternative credit scoring models, both on the Republican side and the Democratic side. It's not a partisan issue. So we're trying to figure out how we can do this, but do it in a reliable way and in a way that operationally doesn't create angst in the entire market, because what we do in this space could have some significant implications.
Well, thank you for exploring the possibilities, because I concur with you. There are alternative models that seem to indicate that we have some opportunities. Let me move quickly to the Housing Trust Fund, because I think it's important for us to explain that when we, and you were here, when we developed the formula, if you will, we put a trigger in. And that trigger was placed there to prevent a person who might be in your position, who might have opinions that would vary from what we thought the law should require. So the trigger required that we not fund because of circumstances, and then it requires that we do fund because of circumstances. It allows circumstances to dictate the actions of the director as opposed to the will of the director. I think it was a pretty good idea then. Seems like it's a pretty good idea now to take the director, to the extent that you can, out of play, and this is no disrespect to you. It's just that we were trying to protect the process that could help people that I was sent here to represent, a good many of whom don't have as much in assets and liquidity as others.
Very brief answer, please.
I'm happy to follow the statute that was written, and that's exactly what we've done. I stand by that decision. Yeah.
Time of the gentleman has expired.